All right, then personnel. So this would be if you are going to have employees. Um, and a lot of you are going to be solopreneurs, that's sole owner, sole member, and also receiving all the profits. So you don't have to worry about this one. But if you plan on having some employees and running a payroll, then you would want to add personnel costs, and this is going to guide you through that. So let's just start with like one individual employee, and later maybe this can be the owner operators. It really depends on what legal classification you guys determine. So like LLCs, owners can't be on the payroll. Okay, they have to file K1s and they only get distribution income. And if you file an S corp or a C corp, then you're required to be on the payroll. You actually can't own a corporation if you are not getting your corporate officer salary. It's required. If you're a proprietor and you decide that you just want a DBA and you want to do business as yourself and you just want a 1099, and then you also get dividends, and you wouldn't have a payroll. But if you decide that that it takes a team, like restaurants and other large scale businesses, you can set a pay estimates here. So let's call this owner salary. You want to treat them as direct labor or regular labor. So yeah, direct, because if they're not working, you won't make money because it's the owner. But some people it could be just regular labor. And in production companies and warehouses, you always want to have direct labor because it's associated with like building the car. If you didn't have your labor people, then you wouldn't have a product. Yeah, we'll say direct labor. And how do you want to enter their salary? So we could do a constant amount, a varying amount over time, a percentage of overall revenue, or a percentage of revenue on a specific stream of revenue. So you guys can choose, but let's just say constant amount for an owner. They're gonna probably, to live these days, I would say it takes at least $3,000, right? A month, or what do you guys think?
I see so.
Okay. That's minimum, and then this will increase as your sales increase, but let's just say $3,000 per month. And that's gonna be September. Okay. You want to include an annual raise. So yeah, let's say that the owner always gets like 25% increase every year. And is this an on-staff rule? So see, so you can choose contract worker too. So this would be a paid salary position. But you can also add your contractors here if you contract out services. So we'll just say this is on-site. Boom. Now we got owner salary, 12K a year 2020, 45K 2021, and almost 100K in 2022. So that all seems pretty feasible. He's still at a net profit. So let's go on to the next expense. So insurance, websites, licensing. So it looks like he has all those entered. So that's great. We don't have to spend a lot of time on that, but let's just make a pretend one. Professional services. What do you want to call this? So I'm just going to call it professional services because everybody needs help. It takes a team. You can't really do it on your own. You can think you can, but it really is a lot harder. And if you want your life to be easier, you want professional services to do outsource for you, delegate things that bog you down. So what sort of expense is this? This is just going to be, it's not rent or lease or marketing, it's other. So how do you want to enter this? Constant amount, varying amount over time, a one-time amount, a percentage of overall revenue. So I'm just going to say a percentage because it's just easier for me to think in percentages. So I'm just going to say 3%, which is not that much. And some people spend like 10 or 20. Okay, 3%.
It would mainly be like me spending money on product development, bringing in consultants, you know, always bettering the product. So that's
yes.
Definitely want that to scale up.
And it will increase each year based on how you set up your forecast rules. Professional 203.19 up to 3,800. Yeah, you definitely will be able to delegate and hand off a lot of, you know, labeling or printing and, you know, bottling and doing all that kind of stuff along with consultants and product development. Okay. All right. So everyone clear on that?
Yep, definitely.
Okay, cool. So assets. Now this is important because now that was all for your profit and loss statement. Now we need to get into the assets. And so the balance sheet is what all the banks want to look at, okay? You're not going to be able to get funding or people, investors or venture capitalists or partners if you don't have a good balance sheet. So this is really where the value is. I mean, yeah, they want to see if you're making money, obviously, at the end of the day, which is what the profit and loss is for. But the balance sheet is showing the value of your business. So you need to put all your assets, including, you know, cash in the bank, cars, homes, leased properties, the food cart, anything of value that you could resell that you're going to give to the business. So you don't want your personal stuff on here. You would only want business assets. Okay. So let's see what, yes.
Is this, so would this be kind of like strictly, well, for me specifically, would that just kind of be your money that you go into your business with?
Yeah. So you would say like if you had 10,000 capital to put into your business, you would want to put that in the cash and then hit equity owners, invest.
Oh, like I don't I don't like the car I have is value very, very low value and I don't own a house. So would, for me specifically, would that just kind of be only cash? Because I don't have anything else to kind of put up.
Yeah, but you have intellectual property, don't you? You have like
Intellectual property. What is
like your recordings, your music, your SoundCloud, your YouTube downloads, all that stuff, right?
Yeah, but even if I haven't made money off of that though.
Okay, so, but if you have intellectual property and you've filed your patents and things like that, that's a value, that is an asset.
Okay.
So someone needs to help you determine what that asset value is of that specific.
Okay. All right.
So cash, intellectual property, computers, equipment, inventory.
Okay.
Yeah.
Gotcha. Thank you.
Yes. Yeah, so what do you have on here? Excluding hot plate. Okay, you got a hot plate. So let's set some stuff up, Rick.
Got a homogenizer.
What do you want to call it? Can you type that in? I don't know how to spell it. Okay, so this is a piece of equipment.
Yeah.
Okay. So yeah, equipment, you know, tents, I'm thinking who else is on here. So for agencies and professional services, um, I would say like all your cameras, photography, equipment, computers, technology, anything like that, will build a value. You want to build asset value for your company. So you'll really want to come up with a good set of assets, because I want you guys to do the Dun and Bradstreet business credit activity at the end of this, where you register your business for business credit. Okay, so you can get business credit, not personal credit, but business credit. And that a lot of people don't know that your business credit doesn't have anything to do with your personal credit. So the more assets and the more value that you can build on this balance sheet, the better your Duns and Bradstreet rating will be. And then that means you can go to a bank or a VC and get a line of credit. You know, people, you can get vendors to just give you terms, 30, 60, 90 days. It's very handy. So think of everything you can. So what type of asset is this? I would say that's current for sure, because anything under $10,000 usually is just a current asset. Long-term asset would be like land, building, things like that. How long do you want to spread out its value? So accounting terms, straight line marks value 5 to 7 years. It depreciates out by then. So, and maybe this, I'm just gonna say keep the full value at all times on the balance sheet, and then you can depreciate it, okay?